Good morning, everyone. Microphone check, screen check. Looks like everything's going through the right things. I had an update to the Zoom side of things on the VIP side, so I want to make sure that the audio is working over there. Sometimes it does funny things when you do updates, but I believe it's working correctly on both sides. Wonderful. Good. I like that. All right, welcome. Hopefully everyone is able to rest up, get ready for the day ahead, all that fun stuff. As always, before we jump on the left side of the screen there, make sure to read through the live trade room morning prep PDF. Very important to go through and understand everything that's inside there. What? Yeah, I know, right? I can turn it up. Ay. All right. Let's get that out of the way there. So, if you aren't a member of the SSFTG side of things or a part of the YouTube family, check out the join button below the stream to gain access before the next private webinar. There's one coming up for VIPs right around the corner, actually. Get access to the SSFTG Discord chat, not to mention the awesome badge next to your name in YouTube, and that way you can show your support and a boatload of other things. If you're trying to figure out what it is exactly that we are doing here in the room, look no further than the Day Trading Academy on SSFTG, not including the live streams and everything else that we've got going on here on YouTube. We also have the Academy, which has 19 plus hours of material, and that doesn't include all the others, and that collection continues to grow. Please keep in mind that the YouTube broadcast does have between a 3 and I've seen as high as a 30-second delay. So just bear that in mind if you're watching on the YouTube side of things. But if you do want to level up to a VIP status, you can enjoy, among all of the other things, exclusive permanent access to our non-delayed live analysis stream, which is via Zoom direct meetings, as well as monthly VIP webinars like I was just talking about, private VIP events, one-on-one scheduling access, all kinds of cool stuff. So whether you're here and totally new, or a veteran over on the VIP stream, welcome. I'm glad to have you here with me today. So let's take a look at some charts, take a look at some news, see what's going on for today, and then we can jump in and see what's going on. Hey Josh, how's it going? Anders, JJ, welcome. Welcome, everybody else. Looking at everything that's going on here, we've got some... There's some things that stand out, obviously. So first off, make sure to grab all of your morning DP levels, grab all of that stuff so that you've got all your charts and everything locked and loaded. But the first thing is taking a look at the news. And I accidentally closed my news. Hang on one second. Reopen it again. So the news calendar, we had the 830 PPI, which came out better than expected, 1% versus the forecasted 0.5. And that's really about it. Now, there is one big caveat here, especially if you're in the agricultural side of things. For the U.S. session, for the indexes, for everything else, we don't really have any other news going on. But the one big thing on the agricultural side, if you're trading soybeans, corn, any of those, the WASDE report. That is the biggest report that you can have on the agricultural markets. If you want to see the ags actually move, the WASDE report is the time to do it. So today at 12 o'clock is when that is hitting. So be very careful if you're on the ags side of things, because that will definitely shake things up. Aside from that, there's not really a whole lot. It's Friday. We've got the CFTC speculative net position stuff, all the normals, but not really much else. News pretty calm. All right. Take a look across the board here. Since I look at the NASDAQ on the other, as soon as we flip workspace, I'm not going to spend too much time on it, but the S&P is going to be a very similar look. The thing that we've been waiting for, a pullback. Woo! Finally. There's maybe. It hasn't made it all the way to L1 yet, but it's close. This might be the first time that we've actually had a pullback in a long time. There's undertow the whole way, but there are definitely a few concerns while we're pulling back here, and one of the big ones is just that it's been so long since we've had a pullback. A lot of buyers who are already vested in this move to the upside, even if they bought over here, now they're sitting at break even. And that's after a 1-2% move to the upside, and now they're starting to pull back. So there's we're coming back to territory where, yes, we are finally pulling back to an L1, but is it a little too late? That's the concern. What I would rather be, instead of the first one to the party this time around, is allowing this move to pull back and show that we've got some support. Give me some, a few higher lows, some higher highs, show me some failure. Then we'll have a pretty good clue that we've got a shot. If we don't get that and it just goes screaming through L1, that's not necessarily a surprise. I'm not going to be immediately looking at a broken L1 or anything like that. But what I will be looking for is that deeper L2 pullback. That's going to be where we're finally getting that dip that kind of helps the market out a little bit. It brings it back to a healthy state of mind. Same goes for the S&P. The S&P's pulling... I messed that up a little bit, but the S&P's pulling back a little bit. We still need to see it dip a bit further. We've got the half DP resting right on top of L1. Same concern, a little bit too late, maybe. We'll see. Gold pulling back, finally getting down into the L2s. Finally, right? It's taken its sweet time, that's for sure, but we've had this drive the whole way up, and the whole way up was with a major undertow. So it's a 3-press high with a big undertow. It's a lot more obvious if you zoom out a bit more. And honestly, this just looks like it was a megaphone. Now that we've got a little bit more of a benefit of hindsight, it didn't quite make it up there, but just the way that it's responding, that's just the best fit. Now it's breaking through, which makes sense because it missed the top. So if it misses the top, it usually blows through the bottom. Now we're seeing that overcorrective phasing to the lows. L2s, this is where buyers are going to be looking to come in. This is their zone here. It's very early to the party, obviously, but this is where the swing longs are going to be wanting to see that balance put in. So gold is becoming that's a pretty big zone of interest right now. Crude oil. Mumble, grumble. Done. Okay. Euro. We've got some nice pullback to the bottom of the channel. There's not a whole lot going on really outside of this 3-legged pullback, and that middle leg being much longer than the much longer than the first one usually means the final is going to equalize to the first. So if we draw that first one up and bring that down, you can see that they've overextended that as well. So we're starting to get beyond these areas of where aggressive buyers are going to want to be stepping up. Remember, the zone that we were looking at yesterday was breaking above this measured move. It looked like the buyers had failed, especially when it started rolling over, but they never made that new low. And when it jumped back up to a new high, that told all of the sellers what was going on. Now we finally come back to an area of interest. Do those sellers use this as an opportunity to get out at break even? Do buyers use this as an opportunity to buy into the low and try to accumulate even more? If we look at the volume, that will give us a cleaner picture. It's accumulation. They're starting to build the third node. Remember, accumulation at its best happens in threes. We've got 1, 2. We're going to need a third that shifts the POC. And preferably, it's going to be lower down here in the 870s, 800s, in that area. Bitcoin. Very nice pop to the upside. The big thing that we were looking at on Bitcoin was the broken L1. That happened. I mean, that was a phenomenal bounce. Now we've got the broken L2s, and the broken L2s haven't even come back. They came close, but so far they've got some difficulties. This does look like they're trying to form a little bit of a megaphone going on up here, and they're respecting the top very well. If we look left, we can see major swing high also lines up around this zone. That can cause a bit of a concern. If the buyers can't show up to the party and start breaking this back up through the highs, then they may just need a bit of a break. Remember, the overall trend is still in the short term down. We're making lower lows, lower highs, and that hasn't changed. There is the break above kind of like a medium swing, but the major swing, that's still way up here. That's going to have to go all the way up to 59.5 and higher just to prove that they've even tried to reverse the trend. So, I mean, I want to be a bull. I am a bull, but I want to be a buyer down here. I want to buy these pullbacks. I don't have enough conviction to want to add or build or do anything really up here because, well, this is where sellers, if they're going to take over, this is where they're going to do it. Wait for a better pullback or a breakout through the highs. Speaking of, Ethereum cracking back above 2,000, popping back above 2070s. That was kind of the zone of kind of contest where they were fighting back and forth, and we've got a lot of back and forth going on, but I think it's pretty obvious what's happening here. We've got all of these failures. I would still love to see a quick flush, and a really fast flush down to 2000, even a trap into the 1980s. Just a quick little pump. Even if it was an exchange glitch or something, I don't care. Just a quick little flush down there to tap out all the stops, and that's probably all it would need for a good all-time high rally, screaming higher, you know, crypto rally. Here we go to the moon. But still looking good. Just, where are the bulls? You know, why did they fall so flat over here at 2100? Just seems like they need a deeper pullback. Let's swap over to the NASDAQ. And as far as the NASDAQ goes, from the beginning of what's happening, at least on the daily, yikes, right? This is a bit of a concern. Remember, the top candle back here on a daily was a bear engulfing. So theoretically speaking, the entries for shorts would have been below that bull bar. Right? It went up above the highs and then down through the lows. That would be the engulfing entry short. Uh-oh. We've got some problems, Captain. We're hitting the break even, and they're responding to it. That's a bit of a problem. Now, if those shorts are defending this area, that could be re-entries to the downside. It could be break-even accumulation. It could be a number of things. But either way, there's sellers coming in here. Whether it's buyers taking profit or new shorts coming in, I don't know. I don't really care. What I do know is that I've got to be careful around this area. So as we start kind of approaching back to these high closes from, you know, the 13,792s, 793s, yesterday's settlement, that zone's, that's tough. Right? That's going to be a pretty nasty area that we're going to have to keep our eyes on pretty closely. As of right now, this could potentially go bear engulfing. There's still almost 8 hours left. Man, oh man. We might have ourselves a very interesting Friday. And keep in mind, typically the biggest moving days out of the week are Fridays. So, well, we'll see. Looking at the NASDAQ on the volume perspective, we saw they obviously built that gargantuan volume node there. But if we build a bit more perspective here now on this more recent rally to the upside, just to the highs, not looking at the pullback yet, we can see that there is that big volume node, 732. And that is the POC, so buyers were trying to support that area. It failed and kind of broke through. So if the market does come back up, that's going to be an obvious point of resistance. And guess what? That's also where settlement is. There's a lot of problems up here. I mean, I know the NASDAQ has been nonstop going higher, and it still feels insane to want to do anything but go long, which, to be fair, should be the case. I feel like that is a fair assessment. But, man, it's getting really tough to want to be a bull up here. There's so many levels of resistance, but it just keeps going. Now, if we draw further and include the volume from today, this paints an even cleaner picture. We saw that previous volume cluster. It was built here. Market tried to break above, failed. Where did the POC stay? Here. Didn't move up. They didn't do anything up there. The market came back, and man alive, they really double stacked the volume. And now where's the market? It's below that volume. It's a tough spot. Man, I mean, if buyers are going to be coming in, they're going to want to backfill some of this volume. So around the 13,650s, but we've got the open right around the corner. So who knows? It's a little bit tough. It's going to be a weird one. I think I should mark yesterday's open on the chart. Ah, okay. If we look at the, hang on, work smarter, not harder, right? There's an app for that. Well, there's an indicator for that. Isn't it current? It starts with C, I think. Current day OHL and then previous day OHL. Really? Okay. Previous days. Open. Well, sure. The open and the close. Why not? The previous day's close for me has always been usually like an orange or somewhere along an orange color. Yesterday's open then would be like a green. There. This isn't RTH though, so that, I mean, that would definitely give a different perspective. I don't know. Can you set sessions on this? Oh my god, this window's driving me nuts. Input series. No, I could if I added a secondary series and just hit it on the chart, but well, whatever. We've got yesterday's open, which is this green line, and the close. This is ETH without having to change the chart. But they're definitely going to be points of interest. BTFD. I don't know. That's been the name of the market lately. If we look on the 15-minute, we already know what the volume is doing here on this rally higher, but we can see we've got the accumulation volume in 3 bumps. They tried to go above. This is maybe another node. There's a lot of volume building here, but shorts are and have been stuck for a very long time. So eventually we'll get that move down. And the only reason I say a big move down like that is because when you leave behind, when a market leaves behind a ton of these VVPs, it loves backfilling a lot of them in one big move. And a Friday is the perfect time to do it. There's no news or anything like that, so they can utilize fear as a catalyst without having to have news. And having such a strong bull market, a lot of people are very vested. So if it starts driving aggressively down, you're going to start seeing those longs liquidating, and that perpetuates further downward movement. And it fills in all of these voids. So seeing a move all the way back down, maybe not to like 13K today, but, a big deep pullback, backfilling some of these VVPs down to 13,300-400s before it bounces back up could be a possibility. Something to bear in mind. So far from the Asian session, if we're looking on the faster time frame, the market did deviate up about 1.5, pretty typical, and then rotated all the way back down. After it rotated down, this is something that is not very typical. After going 1 deviation up, it then rotated down to a 2 deviation move lower. Usually the Asian session doesn't see that type of volatility. The European session does. So the fact that the Asian session got it all, the European session didn't really have a whole lot. Now they're starting to break down going into US. We've gotten down about 1.5 deviations. Just like what we saw on the Asian session up here. When the market deviates away from an Asian, European, whatever session, it usually goes about 1.5 the distance. And then decides what it wants to do. If it's going to continue, it's going to break through the lows. If it's going to reverse, though, this is the spot going into the open that is right around where it's going to try to. Really awkward location here. Just looking at today's price action. Ugh, man, that is... Is that even a swing? No, it's all tops. An algo, a computer, isn't going to see a swing high until this one. So that's going to be the high that we have to work with. First move down is an L3, followed it up with an L1. Deep pullback back into the L3. Wasn't quite enough, though. They did make a new low close, but no new low. So there's no change as far as the Euro session lows. Dip back to an L4, and that's what they needed to get this thing sparked to the downside. After we broke through the lows, it was an L1, and now we're seeing resistance where? At an L1. This isn't a surprise. Sellers are looking for continuation to the downside, and they're going to be looking to do it off of this continued L1. If it fails, L2. We're in a trend. They're trying to get this to trend lower. I know it's counter trend on the bigger picture, obviously, but this is what shorts are trying to do right now. So what we can do is pay attention to where they're trying to try to get in, and if they start failing, those will be clues that longs will start sweeping back up. Still got about 10 minutes until the open. A little bit of time left. S&P on the 15-minute chart has one heck of a bull bar, and that would technically, from the high swing, be a second long. So The S&P on the 15-minute has a crazy bull bar with a second long. Probability's got to be terrible. So very likely better off going for like a 2-to-1. But S&P swing longs, they've got a shot. You can see it kind of on the 5-minute. If you do a bit of candle math, got the open 15, 3 5-minute bars, right? This is the body, because that's where it closed on the doji. It'd have a high wick up to the top and a low wick down to the bottom. That's the 15-minute candle. Beast. Sellers are coming back to L1 on the NASDAQ ahead of the open. If we're going to find sellers' resistance, this is going to be where they're going to try to get that job done. For obvious reasons, shorting the NASDAQ seems like it's an incredibly bad idea. But at the moment, the market is bear trending. So regardless of how bad it feels, we do have a bear trend on more than just a 500 tick. It's a bear trend on the 5-minute chart. It's a bear trend on the 15-minute chart below the moving average clusters. It's starting to get below the moving average clusters on the 60-minute chart. So shorts are definitely viable. It might not feel great, but the market doesn't really care if it doesn't feel great. I think optimal scenario here would be like a 3-press wedge top, just a little bit further up. I wouldn't mind a short in there with a very shallow stop. Essentially, it's got to bounce there. If we look at the move from yesterday's, the high that formed just ahead of yesterday, that was at 9 p.m. last night, Eastern time at least, to the move down, we do have signs of accumulation, but we have not had that third bump. So there's a very good likelihood that we'll stay hovering around here for a little while, or there'll just be a massive dump of volume at the open, which is more likely, I guess, and we form that third accumulation low. See if they can get the press up to this little micro wedge top. As far as volume on the continuation up, we're seeing a bit of volume building up right at the top here in the 75 quarters. Let's get a little closer and see what's going on here. Also see that my wedge is drawn incorrectly. Nice move to the upside, testing the top of the wedge. Sellers are going to be looking for a quick push back down. A lot of volume coming in. We still have like 6 minutes until the open. We're not getting that follow through. I'm jumping ship on one of them at a small loss. I don't think it's game over yet, but it's close. More volume building in up at the highs. A lot more volume building up at the highs. We've got about 5.5 minutes until the open. Very prominent accumulation volume on the much smaller perspective. Which is the reason why I don't want to stay short if it breaks higher. Because those shorts are going to be the ones that are going to fuel the move up to the L2 if they don't get this to rotate down soon. More volume pushing in. Natural objective is going to be 13,666. A little ominous. Hey, how's it going? A lot of volume still smacking into here. Starting to crack above, I'm out. I'm not about to let this crack through the L1 at the open, jump to the L2, and annihilate all the stops on these shorts. If it wants to go back down, that's fine. But like I said, I'm entering this with jumpiness in mind. I do not want to stay short in this kind of market for very long. I either want the response or no. Now, if we can get another move down, we've got 3.5 minutes until the open-ish. We're coming down to the wire here, but... And there's the snap above the highs. So all of these shorts who are trying to build in here are now potentially stuck from like the 680s going into the open. Into an incredibly bullish market where yesterday's first candle of the day was the low of the day. How do you think these shorts are feeling right now? Think they're feeling pretty good? Bet they're feeling great. Not to say that it won't go back down. It's definitely possible. Never say never in the markets. But man, if I'm putting my shoes in the short side right now, because I was there, my shoes were not very big this time. I know that I would be under a lot of pressure right now because I don't know where the top would be. Until, man, we don't have structure until 7:09, bottom of Euro session 7:06. Touchy. So this first little pullback below 679s, if it doesn't stay around, you'll probably see this POC shift up and all these sellers jump out. There's your answer. Whoa. Hasn't cracked above the... It hasn't gotten into the L2 yet, but that jumped quick. Uh-oh. $9.28. Now the shorts are really nervous. There's a lot of VVPs down here. 675.50, 71, especially a big one, 667. They rounded up. It's too much bad luck. So I'm looking for shorts who are under the mentality that they are very much stuck and they're on the wrong side of a potential very large move back to the upside again. If we're looking at it from the 15-minute perspective, again, we're on a very large balance point. Right? This is the big major swing low that they're trying to find balance on after two very nice legs to the downside. So an initial response back down to 665, even a little bit further, somewhere around there will be a zone of interest. 20 seconds until the open. Big L2 push. Whoa, POC shift. Did you see it? POC shifting hard. Now, obviously, the POC is shifting because we have the open. But the way that it's happening is very interesting because it jumped up, then went down and filled the POC. So you could see the shorts were like, oh crap! And then they got out. More continuation back to the upside on the bottom end of the L2. It's still trending market. Remember, L1, L2, you're still in a trend. There's nothing invalidating the shorts in the bigger picture. But these shorter time frame ones, this is no bueno. Short from 6 hours ago, not stuck yet. Oh yeah, for sure. Yeah, if you've got plenty of time padding, then definitely. Big POC shift, volume trying to stay above a little bit more. We still have not gotten a dip back to the top or bottom of the L1. Hovering back through volume, now POC holding it around the L2. Interesting location for them to be building volume, eh? Not really getting much done, though. And this is fair. I mean, this almost looks like algorithmic buying to the upside. We'll know if there's another leg like the first one. Get the sellers to break through. There they go. All right, so I'm watching the return back to the top or bottom of the L1 as a zone of interest for longs to be looking for a continued scalp pop to the upside. The problem is this bear bar down is relatively strong. So if I'm looking at it from the short perspective, I have to assume that they're looking for at least a 1-to-1, which means that I can't be quite interested until the 678s. I've got to see it dip into the zone a bit. The one saving grace is the big VVP hanging out at around 81, but it would be nice to see it flush just a bit lower. Sellers are holding the L2 so far. Look at the bigger picture. What I would prefer as an L2 seller, more on the swing perspective, would be to see a move down, an attempt to go higher, another move down, and another attempt to go higher. This one could be a trap up or down, but then a nice turning point, and that would allow sellers of pretty much every description into the move lower, which would fuel the larger move. Getting back to the top of that L1, they missed it so far. I'm a bit more interested in the bottom of it, but scalpers will be looking for bounces here. Yep. Just quick little scalp pushes. I didn't get that one. Another quick little pop underneath the 80s. Okay, so a little bit more responsiveness, some nice bull bars. Nice continuation, scalp pop back to the upside, getting that little dip down a little more. Come on. Just man, they're tickling. It's this blue line right here. It's just so close. 77.5. Oy. All right, that's another really strong bull bar back to the upside. That might be good enough. Man, it was so close. A strong bear bar back down, especially if it's a failure, will be a clear indication that sellers have jumped ship. Either way, though, they're rejecting the bottom retest of the L2. This is an optimal spot for sellers to get a bear bar in. So shorts have a reason. From their perspective, that means that sellers have down to... It's got to be a double bottom before they find support again. Oh, now a one-tick miss on the top of the L1 and churning back up again. If bulls follow this through, sellers are in a really bad spot. It's still looking okay, though. Nice twin reversal. Bears are trying to put the pressure on. They're holding the POC. They haven't given up yet. Sensitive area. All right. Get down into these 77s, NASDAQ. Come on. Nice pop back up. Come on. Get through it. Ugh, nope. Couldn't get through it. Can they back up a little bit more? Maybe give one more dive closer to the bottom of L1. Heavy bear bar. Ooh, it's got to be closer to the bottom of L1 now. Or a strong bull bar back up. Ask and you shall receive. Hi there, bull bar. Holy crap. They hold support here, or does it immediately fail? They have not triggered that bull bar. This could potentially be a third lower high failure. 100 ticks left. Ooh, uh-oh. Inside weak bear bar. That doesn't help. 3 press wedge. One more good drive to the downside. Get to the lower end towards that bottom L1. Big bear bar. Might be better to look for a bit more of a slide to that 666 again. Okay. Well, now if they go back down, sellers might be feeling still a little bit stuck, but it's a third lower high potential continuation down. That's tough. The response off the bottom of this L1 has to be almost immediate. I mean, it can't really hover there for too long. We do have the first 5-minute bar in. So let's see here. Oh, whoa, big POC at the bottom on the S&P. 87.75. Okay. Let's see if the NASDAQ, because they have a little bit of a different perspective on the NASDAQ here. First 5 on the NASDAQ is not looking healthy. 690 is the POC. And that's a failure 1 tick miss underneath the lows with a third lower high. That's a huge problem for longs. Is it just me or is the action on the NQ feel different this week? Oh yeah, definitely. There's a lot of herky jerk going on. But, well, hang on. Oh, no, they bottom bid me. Oh, I missed it. Ah, crap. Let's see if they get another flush down. That sucked. I hit the bid after they bottomed out the bid, and I missed it. 1 second too late. We've got a big POC at around 664. Now I need a bit more proof, though. I missed the opportunity, so now I need to see them actually go up off that. Well, I didn't miss. I just didn't get a fill. But it's very jerky all over the place. And I think it's fair because the market's just not pulling back. You've got this parabolic move that's just up. Stonks go up. You know, like, it takes zero effort and thought. You just buy and hold, and ta-da, there's more money. It's ridiculous, but that's what it's been like the last few days. And a lot of people don't necessarily know how to approach a market where there's no two sides. It's just one side. So, I mean, it's great at first, and it's great as long as you're long and you're still holding and it keeps on going. But it starts to get to a point where it's like, oof. You know, this is what we were talking about at the beginning, too, where it's like, man, if this pulls back too much, I don't want to give back all these gains. And then everybody starts jumping ship, and it causes this big domino effect. And then it ends up cascading to the downside, and then we've got that huge drive that fills the VVPs on the daily and the hourly. Definitely a concern. A little bit more sideways, a little bit more calm. Now we've gotten the open jitters beyond. It's only been 10 minutes. Bottom of the L1 does end up as support. Broken L1 traders are getting out. More proof of the rotation back to the upside. Although we still have not had a higher high. So the bulls have a lot of work to do yet. A strong bear bar down will get sellers re-involved again. Oof, I'm going to cancel that one. That was a really bad move in terms of a fill. See if they can back up a little bit more. They're forcing sellers to sell directly into the L1, and they flatten it out. Let's see if they can pop up just a bit further. Higher low with a big wick on the bottom. Okay. Let's expand the volume further and see what's going on. More continuation down. Whoa! So this bull bar back up is one of two things. It's either a break even, and we see another continuation back down to a new low, or this is a potential bottom that they're trying to put in here. It's a deep L5 pullback at the open. Low probability, extremely high reward. If the S&P wants to dip back to 89, I would be interested there. Backfill a little bit down here. As far as to the upside on the S&P, I mean, this is an obvious brick wall from the overnight. That's plain as day here, but I guess the next point would be 93.25, like one tick above the top of this bear bar. And then from there, it would be re-challenging the earlier entry point from sellers at 94.25, which is also back to settlement. It's like a nice V-bottom potential, though. Just got to get that low side trap. Crude oil looks like an absolute train wreck. Bitcoin starting to rally back up towards 58,800s. Euro churning down Euro's churning down a little bit here. The volume shift. Gigantic VVP sitting at 19,170 and another one resting just a little bit above that, 19,270. And the settlement's above all of those. Yikes. Gold has a phenomenal bounce off of the L2. So the initial longs, the buyers who were early to the party, they've been rewarded so far. Keep in mind, upside objectives on a bounce like this on gold is back up to like, well, I mean, at least back up towards 1748, and then back up to the highs settlement, and then back to the top of the megaphone to see if they can actually hit it this time. Strong bull response back up. Still no pullback, and now the S&P has triggered above, so if it does go down to 89, that would be an engulfing, which would be a problem. So I would rather buy a point down than be at 88. So let's offset these. Oops. There we go. NASDAQ popping briefly above the first 5 volume at 690 and now trying to hold above. This daily candle is still pretty bearish, but they've only got, well, 7 hours left. More bullish continuation up. They're trying to crack through the top of the L2 now. Let's drag this forward a little bit so we can see where they're at. Just nicking the top of it. Gold on the 15-minute. Man, gold on the 15-minute looks like the potential start of a huge V bottom. And NASDAQ breaking out through the highs. S&P did not pull back far enough, so now if they dip below this one at 90.5, that would be the next zone of interest. 90.5, 89.5, 88.5, back to settlement. Bear bar off of L3, but now we're reaching indecision points. The trend, when you have a good, strong trend, typically you're going to maintain L1s, L2s, right? That would be a trend. If you're hitting L3s, it's not that the trend is over, it's just that it's getting weak. It's a cause for concern that L4s, L5s might be the next step. They almost got that funky little 3-press wedge there. What a rejection. Holy crap. L3 said no thanks. Nice work. Done already. I like it. Looking at the drive higher so far. Sellers are still trying to hold these 13,700s. A lot of volume coming in at 700 too. Holy cow. We're now on the L3. This might just be a two-legged move up. It's almost perfect to the L3. Same problem on the S&P. Now this would be a bear engulfing, so I have to drop my entry a little bit here. 89.5 with the assumption that sellers... It is a bear trend. I still have to assume they'll have enough to get it through the bottom by a point. Reduces the probability that it'll get a fill, but that's the zone of interest, I guess. Tapping the European session lows as well while we're building volume on this move up. And if we look at the bigger picture, again, they're holding the L3 to the downside. The concern is that if we're hitting L3s, well, what's to stop an L4 or an L5 or something further up? A swing seller would much rather be a short up here or here. I know when my feet start hurting, it's time to stop. I love it. That means it was a good runner. 13,700s. This volume node is a big point of interest. This big leg up is going to shake the confidence of a lot of shorts, and a strong bull bar back up isn't going to help them. We are also making, in the short term at least, higher highs, higher lows. No major ones, though. These are unconfirmed swing high breaks. They help a lot less. And here it sits. Not much going on. Ooh, Bitcoin getting slapped right now. Big pullback on Bitcoin. They just got nailed off the 8,800 top. Now they're at 58,003. 58,300. Jumping back up to 400. Big flush. NASDAQ buyers trying to get this to climb back above these highs. That would be further proof of continuation. They're stuck right on top of this measured move. Is it time for the bulls to come to work? Usually there's a third higher low. I mean, yeah. 1, 2, 3. I get it, right? I mean, they might be there, sure. And I might have totally missed drawing this out now. I'm kind of pissed at myself. How did I miss that? That's like picture perfect, man. Anyway, c'est la vie. Fantastic bounce off the lows of the wedge, and now they're continuing a breakout to the upside. So with this breakout higher, usually when you have this type of rotation, you've got that one more higher low. Not necessarily expecting it to go way down here anymore, though. More towards like maybe 690s. That would be a retest of volume. But longs will be coming in here with the assumption that they'll be able to take a low probability but very high reward trade. In the sense that there'll be buyers while it dips back. We'll just say the top of L1 again, somewhere, or let's just say the volume cluster, right here. But their stops will be below the lows, right? We're not talking scalps here. Okay. The objective for these traders, they're not going to be back to, back up to here. That's not, no. I mean, if they wanted high probability, sure, I guess. But the objective for them, that's going to be back up to settlement, right? So you're dealing with a very nice reward versus risk, maybe a little over 2 to 1 ish, right around there. It looks like a freaking mountain. Jeez. At the summit of Mount Vesuvius over here. Got a lot of consolidation going on up here. Volume has very obviously built up here. The POC cluster sitting at 704.25. The market is staying below it. The S&P refuses to give me an entry. We've got that micro double bottom now. 90.5. Please, sir, can I have just one? Not even another. Micro double bottoms usually do end up being incredible zones of support, but the problem is we're coming into the major objective completion. The major objective is up to hit 4,094. That's settlement. So if they're hitting these major objectives, it's not to say that we won't see something like this. But the problem is that part, right there, the likelihood of that happening becomes a bit higher. It's not as easy. Now, with these micro double bottoms ahead of that, if we can get a quick little dip underneath it and then a rotation back up, that would be a nice point of interest. But getting really close to the settlement is going to cause some problems. Still buying low, so out of all the locations, it's favorable. Oh man, the Bitcoin buyers gobbled that one right back up again. Still 6.5 minutes left on the candle, but at this rate, they look like they're going to turn this thing into a bull engulfing on the Bitcoin 15. Same with Ethereum. A lot of consolidation going on here. Seems like we're very early in a wedge, potentially. A nice strong bull bar will get buyers re-involved, but there is a problem. It's directly into the bottom of the Euro session low. S&P hits the settlement price. Fine. I still don't mind 90.5, but it's going to make it more challenging. Creeping back up towards where the completion of the measured move to the upside is. We're still dealing with a lot of resistance, but if they can climb just a bit further, we start seeing a lot of open sky. Back to the top of the wedge. If sellers are looking for trend resumption out of an L3, this would be an optimal place for them to sell because their stops can be above the top of the L3, the top of the wedge, and the risk is relatively small, considering that the reward would be back down to the bottom. It's like a 7 to 1. So puts, options, shorts, etc., micros, they're looking for shorts here with small stops. 4 minutes, 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 4 S&P has hit the settlement, so I am not interested in buying below the next bull bar. Although that is likely the next point that they bounce off of, the probability is not good enough for me to want to attack that area. It makes more sense for me to challenge the micro double bottom at 90.5. We're definitely seeing some issues on these highs here. We've got some pretty nasty undertows going on the NASDAQ in this L3. You're seeing it on the faster one on the MNQ too? Yeah. It's it's getting a little sketchy here. The bulls have got to take it out of this. Taking a bull pattern and breaking higher is very difficult. But look at the 60-minute chart, right? I mean, the 60-minute chart only has 3.5 minutes left. Look at this candle. Would you look at that? Look at this. Look at that. 13,690, huge zone of support. That's that 5-minute POC from the first 5 volume, right at the base. So having this candle close really strong, seeing a nice wick back down to those 690s, again, seeing that dip down, and then closing another good bull bar back up. Ooh. I mean, you can almost taste the bullishness here. Just not up here. Pull back. Story of the NASDAQ, right? The market's starting to break above that POC volume, all of those shorts trying to build in from these quarters, these 704s, 700s. Oof. Bitcoin getting some pressure in these final couple minutes back down again. This 15-minute candle's wild. Undertow is a pulling, yes. So maybe the NASDAQ, the undertow is pulling it lower or higher. What are you seeing? So in terms of an undertow, generally speaking, if I'm saying we've got an undertow coming into the L3, that would be from the perspective of shorts. Sellers are trying to derive an undertow inside of here, but they don't have one. On the faster time frame, the MACD is going up and so is price. Nothing's saying there's anything wrong here. On faster time frames, there's a divergence, meaning that on the MACD, it's actually trending lower while the market's making higher highs. That would be an undertow, meaning that it's trying to drag it down. It kind of sucks it out to see. It looks like everything's fine, and that's why I use the term undertow. Because it looks like everything's fine. The market's going up, hunky-dory, woohoo! But that vicious undertow that's looming underneath the water as soon as you stick your foot in and it sucks you out, that's why I call it an undertow. Because that's what ends up happening. In this case, they tried to get it to go, right? So what ended up happening? We have this big drive to the upside, huge volume cluster, but there's nothing going on here. There's nothing suggesting that sellers are taking over. So not really a concern. On a faster time frame, there was, but it never even went lower. So a good example would be, I want to find a better, like right here. This is a fantastic example. The market is screaming higher, but the MACD, after it made these highs here, it was just, nah, you might want to be careful. It doesn't mean that the market is going to stop. In fact, it usually means it's going to keep going. But what it does tell you is that the next pullback that does end up happening is usually going to be deeper. Potentially even a reversal. So when you've got that undertow like that, I'm not expecting shallow, 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 shallow. You end up getting these deep pullbacks. Deep pullbacks. That's where things kind of shift a little bit. So far, the only ones that have had that are the are the bulls. The sellers have been on the back foot since the bottom. Climbing into the L4. This is where shorts on the longer term perspective, looking to the end of the day, trying to hang on for puts, for, you know, long-term option plays, that kind of stuff, back to the bottom. I obviously am not interested in shorts. I would much rather be long, but this is where shorts are going to come in. L4s, L5s. We saw them get back to the L3s. That was the clue. Something's wrong. Seeing it migrate to an L4, L5 isn't a surprise anymore. It's like, oh, yeah, okay. But look at the context on the way up. What have we had so far? We put in the low. We saw rejection immediately on the L1, went down. They did make a new lower close, but they never made a new low. So no real change there. Came back. Those sellers got obliterated. Didn't even show up to the party. More sellers got obliterated. Didn't even show up to the party. These sellers did take some heat, but they were not invalidated, and they were successful. It rolled back down. Successful in the sense that it did move in their favor. But it did not make it back down to a new low close, anything like that. All it did was allow these earlier sellers who got dumpstered out. And now that it's rotated back above this L2, what do you think's going to happen here? It cracks back above it, and you got to look real close. But see that little wick right there? It goes, oh, no, crap, I'm wrong. Out. And they get out. That's their break even. Sometimes it happens really fast. Sometimes a bit more obvious. But along the way, then we have sellers who are at the L2. At the top of the L2, rather. They got dumpstered. What happens when it comes back? They get out of break even. Rejects the other way. Now we've got L3 sellers who are getting dumpstered. What do you think's going to happen if it comes back? I'm going to, throw a guess out there that buyers are going to try. Doesn't mean they're going to be successful. But I'm going to assume that they're going to try. L4's got a little bit further to go. The S&P, I haven't been able to get a fill at all. None. Not a single one. Not even a bear bar. We have not even broken a previous candle's low yet on the S&P. 93 would be the first zone of interest. 92... 91. Eventually we will. We are starting to see a lot of signs of consolidation here that are a bit nerve-wracking. On the MACD, we've got some pent-up energy. If we start cracking out of this pent-up energy here, that could be a pretty big clue of a turning point. We're coming into an L4. So what does that tell us, right? If I want to be a buyer, I might not want to be a buyer on a higher low. Might want to hold out for that retest of that volume dip, remember? See if we can get back there. Maybe I'm just hopeful. Fingers crossed, right? That 60-minute candle on the NASDAQ is incredible. And gold. Clickety clackety. Pushing now through the first portion of L4, getting to the top of it. Big bear bar down. They did end up closing that big bear bar on Bitcoin, and not so much on Ethereum. There's a lot of wick on that one. So far, the response has been immediately bullish right back up again. Look at the 15 on Bitcoin right now. If the bulls can maintain their movement up here, obviously. This looks like it's building a pretty nice shelf. And if they close out a nice bull bar response here, you could very easily see another leg back up to retest up into those plus half deviation, plus half DP areas in those zones. But that's the problem, that you really don't see it going much further, right? There's not a whole lot of room for it to keep going until we start getting those nicer pullbacks. Hasn't happened yet, but so far the buyers are trying to prop it up. Ethereum's just a mess. Ethereum really needs a flush. And gold, man, that V bottom, talk about missing the boat. The only way in were options when we were first talking about it when it entered into the zone. That was it. After that, it was gone. On the crypto side of things, outside of Bitcoin and Ethereum, looking at EOS, we've got some nice kind of wedging, penanting-ish formations going on, but super consolidated so far. Same thing goes for Litecoin. They're trying to break above the highs, but no conviction as of yet. Bcash, same problem. Link, same problem. Lumens, I mean, that was obvious. They're hitting the top of the channel. Tezos is. They're following through a little bit. 1 out of 8. So let's switch back. On the L4, we've got some resistance trying to push down. Another bull bar and another failure to break below a previous candle on the S&P. 93 quarter and 92 quarter. Now that we're going back into settlement, that'll be the zone of support. Not a whole lot of volatility today, or at least not as much as I thought there was going to be. Of course, we'll probably wait until like 350, right? Get it all done right before the end of the day. Starting to break out of the wedge on the MACD. Somewhat of a clue that a breakout move is coming. Doesn't necessarily mean up or down, but to expect a larger than normal move. It would make more sense to see that be down. And here it sits. S&P got close. NASDAQ climbing back up into the L4. Maybe we do get another 3-press top at more of the high of the L4 for sellers to try to challenge. They're running out of reasons to want to go short, though. And it's starting to get very interesting looking for a retest of the L3 on the other side, that green zone, as a buyer. Expand volume a bit further, see if anything's changed. Bit of an accumulation POC shift up to 727, but price is still staying above it. Got a bear bar, 94.5 on the S&P, 93.5, 92.5. That'd be 1 point down from the close. They opened with a gap down, so... All right, NASDAQ's got one last-ditch effort at the top of this three-press wedge. That would be at the high of L4 for sellers to try to pressure back, but that's about it. All right, NASDAQ, come on. One good pop up to this wedge top. This will be the zone where shorts will be looking for a response back down. I'd like to see a response of at least like 15 to 20, though. I mean, if this zone is going to be responsive, we should be able to get at least a little bit of a push. There we go, finally. Jeez. Quick little snap back to the downside. S&P is getting close. 94.5 would be the next zone. From the swing perspective, now that we have climbed above the L4, if we can get a push back down to the top of L3 or L3 anywhere, that's going to be a big zone of interest for a lot of buyers to be coming in on the dip, trying to get a better price. S&P dipping below the first time below a previous candle at all today. It's the first time on a 5-minute chart. Scalpers will be looking for a continuation move. Why has volatility been so low lately? Spring break? That could definitely be the case. I mean, I know spring break, and it kind of took me by surprise. I totally forgot about it. And so, you know, I realized, like, oh, wait a minute. The kids don't have to go anywhere. Oh, right. It's just everybody's schedule's a little bit weird this time around for obvious reasons. The world falling apart and all that fun stuff. So, I mean, it could be. Maybe it is spring break. I don't know. Either way, it is very slow. I mean, the volatility compared to like last week or the week before, this is nothing. It's like the market's just sleeping. Why did you get out of the NQ short so quickly? I only had one contract. My first contract, when I'm looking for a bounce on a counter trend move and a downtrend, or I'm sorry, not a counter trend move, the short term counter trend. The longer term is, but with only one, my first objective is a quick response. That's why I said, like, you know, a response of about 10, 15 ticks or so for the initial bounce, because the first bounce is expected to be buyers that are taking profit. So the first bounce usually isn't as big. Usually get like a quick little snap back while they take profit, then it goes back up again. So that's why when I'm getting into those areas, I take a quick profit on that first one because I'm expecting them to come back again anyway. But, of course, trying to expect something like that, and it didn't happen. So, you know, say la vie, welcome to life sometimes, I guess. See if we can get a little bit more of a response back to the upside on the S&P. 93 quarter. There we go. Rather see 93.75 or potentially further. Upside objective would be, I'm going to go the high closes. That'd be a 95.75. Some potential candle gapping to the downside, so. First objective off. Now we see if we can keep it going. Nope. Guess not. All right, well, I tried. Generally speaking, with the ES, I'm almost always on the scalp side. I don't even remember the last time I had a swing trade on the S&P. So as far as the risk perspective goes for scalping always has a higher risk profile. Usually you're risking, on average, say 1 to 2 inverse. Meaning that if you're going for 1 point, you're usually risking 2 on average. And that would be due to the fact that you need a high probability in order to make anything work on scalping. So from the risk perspective on the S&P, it's going to be generally quite a bit higher. I'm, in this case, trying to increase my probability by adding more on the pullback, which is obviously more dangerous. So you don't have to do that. But if that were the case, then it would have been a stop out at this point rather than being adding in on the pullback. But if you're going for 4, you typically don't want to risk more than 8 if you can't. I mean, if you can help it, at least. And there's a full video in the YouTube section that goes over risk reward and probabilities and all of that. It's a big, there's a lot to it. But that goes over the different mentalities from different perspectives. So from a risk perspective, if we started seeing, generally speaking, I don't typically take stops on the S&P because I modify my probabilities by entering in more, etc. But if this were to, let's say, go down, fill this one, go down, fill this one, go down, fill this one, if we're starting to go back, I mean, I know the trend is incredibly strong, but if we start seeing this breaking down below 2 or 3 candles like this, that could be a potential problem. They've got to start going back up much sooner than later. And usually, if you've got 3 strong candles that are counter to what you're trying to do, it's a good clue that it's better just to get out. So 3 strong bear bars against my long position or something like that before it's hit a target, which, like I said, almost never happens, but it does sometimes, you know. Welcome to high probability trading, I guess. It's just when it doesn't follow through, it bites you. That's why you have to maintain a high enough probability. Of course, the inverse of that is low probability, high reward trading, or i.e. swing trading. incredible bull bar in the 15, but man, I would love to see a pullback. Back down to like the 13,690s. That would allow buyers a fantastic entry point. I mean, we already know a lot of buyers are probably in long down here anyway, but shorts are still stuck and they haven't had a chance to get the pullback. EMAs. I mean, either way, an average is an average is an average, but I prefer EMAs on the faster time frame, like a 500 tick, for obvious reasons. The faster time frame, I need it to be more responsive. I just find that I find more support if I'm going to be using it that way off of EMAs than SMAs, except for the 200. That's a different one. That's a different ball game. The 200 SMA can be pretty brutal. But, I mean, an average is just an average. It's just an average for the most part. The moving averages on the faster time frame, that was from, man, like a year ago. We did a random number generator to derive a bunch of moving averages to trade with, and it's still the same ones. Moving averages are just averages. As long as you've got a fast, a medium, a slow, it should be all right. Or something to at least give you an idea of what the volatility is doing, like Bollinger's or just something. Is that a perfect double top? Yeah, no problem. Perfect double top at the highs and another rejection back lower. They do still have the POC up at 727. There is a monster of an undertow on the faster on the NASDAQ. Oh, POC just shifted. 13,736. Now we got to see how they respond to it. Well, here we are back into La La Land again. There's not a whole lot going on. Crypto getting pushed back down again. Ethereum back to settlement. Bitcoin not quite, but they're putting on the brakes from the bulls a little bit. I would agree. Bitcoin it has felt heavy. It's just all the other ones are screaming. You know, they're doing really well, and usually Bitcoin's kind of the leader of the way, but it sort of feels like the Leviathan in the room, the Goliath, and it's just kind of slumbering its way across. You know, it's just, I don't know. And maybe that's just it. Maybe it's a lot like the bonds, where it just takes forever to do anything now, and Bitcoin's no longer the volatility horse that it used to be, but I doubt that. Something tells me that's not the case. So maybe there's just a lot of lumbering around here because there's some big positions and big bags that are getting filled. The only one that's going up right now is Tezos. Barely. Look at that rejection on the NASDAQ. They couldn't even get the L1. Come on. Still not good enough. That's ridiculous. What are the values of the EMAs? The EMAs that I use, again, there's no real rhyme or reason to them. They're actually derived off of the random number generator. So as far as the values, the EMAs are 68, 34, and 116. How's that for you? I would challenge everybody to do the same thing. If you put a lot of weight on a moving average of any kind, go to Google and do the same thing we did. Do a random number generator, pull a number, throw it on a moving average, and see how many times the market responds to it. That's what I mean by an average is an average is an average, because the market will always come back to an average. It's a reversion to the mean. That's just how it works. So the way that I operate moving averages, whether it's these ones or the 21, 55, 300 or anything, you know, it's always medium, fast, slow. That's it. So that's why when I say I find moving averages to be very irrelevant in terms of decision making for a trade, I'm not joking. They're just an average. That's all it is. POC shifted down. Yes, it did. Now the market's underneath it. Very curious to see what they do here. They're trying to get it to rotate down. The L4 is still holding. This is the L3 right here, 721. It was good trading the other day. Too bad it's Friday. See you next week. Yeah, definitely. Have a good one. Enjoy the weekend. What I notice is that using the 20 EMA on every imaginable time frame, the market always responds to it. Yeah, and you can do that with any number that you throw. It literally does not matter. There are some that will, like I said, the 200 will find a bit more responsiveness because the entirety of the world uses the 200, you know what I mean? It's more of a self-fulfilling prophecy. So yes, there are some that will maybe have a nudge in probability more, but more often than not. So as an example, let's do it real quick. We've got a couple seconds while people are typing in questions. If we go to Google, and I want a number that's like, I don't want too fast of a, what should we do? Let's do a number between like 100 and, I don't know, 102 or 100 and 300. Hey Google, give me a number between 100 and 300.
Here's a random number, 299.
299, gotcha. Okay. Open up a new screen. Unlink them all because I do not want them to get linked together. We will not show any drawing objects. I don't want any of those on there. And we're going to erase everything. I don't want to see entries. I don't want that. 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 I think that's everything. That is my 68. What'd she say? 299? 299? Whoa, buy now! The market responds to it always. It doesn't matter what number you put in. It's an average. The bigger the number, the less times it'll poke it. But, you know, it's something to keep in mind. That's why, you know, there's nothing wrong with using... I use moving averages. There's nothing wrong with them. But just... don't have that necessarily be the only decision point. You know what I mean? Like there's a lot of things that happen in a moving average. Put another number, 174. Sorry, I just saw that. Let's do a different one. Let's do crude oil. Just so you know I'm not cheating. I'll use my crude oil on a 15. Crude oil on a 15. Totally different. Get rid of 174. 174. There you go. There's your sell signal. There's your sell signal. That one failed. There's your buy signal. I mean, it looks incredible. You know, that's the thing. It's super easy to get tied up in. The same thing goes with any indicator. That's why hindsight is so dangerous, because you can look back at something and it'll look amazing. But that's a fantastic point. It's more important, and what I'm a bigger proponent of is how the market responds to it. Yeah, there's a moving average there, or yeah, there's that there, but you'll notice what I'm doing, at least for me personally, when I'm trying to find a location of interest, I'm stacking like 5, 6 things, maybe not that many if I can't find that many, but like at least 2 or 3 things. There's got to be at least 3 before I'm even interested in doing anything. So that way I know that it's not just me and anybody who's like me looking at that one trade. It's me along with those traders, along with those traders. I know I've got some backup. You know what I mean? And if I'm wrong, I'm wrong. There's nothing I can do about it. But at least I know I tried when the probability was in my favor. And if there's a moving average on top of that, then that helps even more. You know, but maybe not the only thing. I use the VWAP bands with plus and minus standard deviations a lot. And price points bounce off of them. Oh yeah, definitely. But see, that's totally different. That's a rendering of. I mean, it's a totally different instance. So yeah, I do too. That's the morning DPs are all based around the probabilities of how long the market will stay beyond those areas. The same thing goes with standard deviations and all of those. The market responds there because the probability is there. That's where all of the probability lies, and it's guaranteed probabilities in the sense that in the long term it's testable and it's always the same. So that's where a lot of algos, that's where a lot of HFTs, that's where a lot of systems trading, that's where all of that takes place. So there's definitely going to be a response there. And the farther out you go, the more violent the response is. So if you go out like a half deviation, okay, you know, who cares? It's got like a 38% chance that it's going to stay underneath this, not big deal. But if you're out like 2 deviations, well, totally different ball game, you know? Like now they've got some massive probability that it comes down. Hey, at the VIP page, which topic link is where the course mats are located? You talk like the course material. That's all in the Day Trading Academy. That's not part of the VIP page. It's separate because you can just buy the course separate. So I have a separate page for it. If you look on the logo at the top, it'll say Day Trading Academy. That's the one that you want to go to, and that will open everything. So up here, DTA. And that's all of it. All right, let's do a final call for questions and we'll wrap it up. As far as this week goes, let's see here. From the 5th to the 9th, don't care about the dollar values. We just want to look at the numbers. There we go. 66 trades this week. 68.18. So 68.18 minus 100 is 31.82 are the losses. Average losing trade is 13, so 413.66. 68.18 are the winners, times the average win of 18. 1227.24 minus the losses. Positive math expectancy of 813. Not bad. Not bad. So as far as a math perspective goes, right in line with exactly what we saw last week and the week before, and it usually ends up right around that zone. So another pretty typical week in terms of overall movement. Unfortunately, I wish there'd be a little more volatility, but all right. How low can the positive math expectancy go before one needs to wonder about their performance? Near 100? A lot of it depends on the amount of trades you're taking too. So remember, based on for me, on average, I'm usually floating around plus or minus 1,000, right? That's my average based on how many trades I typically take over the long run. So your math may be totally different. Yours might be closer to a positive or a negative 100. It might be closer, like if you're trading a ton of size, you might be even up in the 10,000s. There is a big dependency on how many contracts you're trading. So keep that in mind. But generally, as long as it's a positive number, that's good. And the better the positive, obviously, that's that much the better, because now you're overcoming commissions, you're overcoming everything else. I do my calculation post NinjaTrader commissions, which aren't right, but at least it's close. So I know the number in the end is relatively close to what it's going to be. Ugh, I'm shedding. That's the part I hate about tattoos. Sorry, TMI. My brain doesn't work internally. It's an external monologue only. John is standing up. All right, not seeing any other questions coming in. So that's going to do it. We're going into a Friday. Like we always say going into a Friday, take some time away, right? Get away from the markets, spend some time away, do something else. I know, maybe Saturday is study day, but take Sunday off or something, take a day off. During the course of a week, us as traders make more decisions in one day than most people make in a week. We need a mental break, right? We've got to be able to come back over the weekend on Monday, ready to rock and roll. So make sure that you get some good rest over the weekend, do something fun and enjoyable, get your mind away from the markets so that when you come back, you're ready to go. Hopefully you had a great day of trading. Hopefully you had a great week of trading. If I missed any questions, you can always shoot me an email, jhb@ssftg.com. Get you covered from there. Otherwise, though, enjoy the weekend, rest up, and we will see you all on Monday, all right? Have a good one. We'll talk to y'all later. Thanks.